I mean, you can see evidence it's starting to happen. Like I just saw Walmart is going to start accepting Bitcoin. Steak and Shake accepts Bitcoin. What Jack Dorsey did with Square, and millions of retailers can now accept Bitcoin. It's starting to cross the chasm. It hasn't yet, but it is becoming more of a mainstream accepted thing. I think the original FUD around Bitcoin is starting to die off around it being just for criminals and bad for the environment. A lot of that FUD's kind of fading away, and you're starting to see it more and more accepted in more places. This year in the US, you're going to see way more Bitcoin adoption from banks. What better evidence of it crossing the chasm to mainstream can you find than banks in the US, which are conservative financial institutions who fought Bitcoin for a long time and are now embracing it?
How many chairs are you sitting on right now?
Hello, everyone, and welcome to One Chair. Today, we interviewed Boyd Cohen, who's the CSO at ArcadiaB, the first Bitcoin Treasury company in Mexico. And Boyd is also a professor at ArcadiaB Business School and the author of the book Bitcoin Singularity. In our discussion with him, we talked about Bitcoin, about what benefits Bitcoin Treasury companies bring to the ecosystem, and do a deep dive into ArcadiaB specifically. So let's get right into it. Here's our interview with Boyd Cohen. All right, Boyd, hello and welcome to the One Chair podcast. It's great to have you on.
Thanks for the invite. Love the focus you have, and hope you grow your audience.
Yeah, we do too. So maybe to start off, could you quickly walk us through how you got involved with Bitcoin first, and then the journey that led you into Bitcoin Treasury companies all the way to joining ArcadiaB now?
So there's a lot of different places to start people's journey into Bitcoin, of course. I'll speed run through it. I got my PhD at University of Colorado in business. First time I was ever exposed to Austrian economics. Only we spoke about Schumpeter, which is like the father of this concept of creative destruction and how entrepreneurs kind of disrupt markets. But we didn't really get into like the base layer of money and what's flawed with fiat. And I really never figured that out entirely till a couple years ago, to be honest. Fast forward, I lived in Argentina for a year, and the reason I moved was they had implemented currency controls right after we moved there, and it was terrible for a foreigner to live there. This was 2012 and 13. Wasn't great for locals either, but yeah, I mean, a lot of stories most people who've never experienced it wouldn't even believe, but like government won't let you take money out of your ATM in other markets. You can't send money to friends and family. Um, the economy starts to dollarize, but you can't get dollars except in black market, like back office, like shady businesses. You have to bring, fiat dollars and hide them in a bag and show up and get dollars at a rate that's not published anywhere to pay rent or whatever. So, the stores are selling things at a different price in the morning than in the evening. It's just crazy. It's chaos. So that's why we moved. So that was like, I'd say step one was my PhD, exposure to Schumpeter. Step two was living in a country that implemented currency controls and has generally experienced very rampant inflation over decades, off and on. Step three was observing what was going on with the Occupy movement and the financial crisis, and the perception that capitalism was failing society, and that maybe companies were to blame. And funny, because I have a PhD in business and was like very pro capitalism, pro business, and it was the first time I ever started questioning that and saying maybe I'm wrong. Maybe capitalism is part of the problem. And I wrote this book called Post-Capitalist Entrepreneurship, and I started writing in 2016, I think. And in there, I talk a lot about DAOs and blockchain and alternative currencies and like alternative ways to organize our economy. It's more democratized, decentralized. I talk about Bitcoin in that book, but I didn't get it yet. And I even published an article after that about alternative currencies, and I had a paragraph or two about Bitcoin, but I still didn't get it. I was really into the idea of how blockchains could decentralize and democratize the world, and I wasn't into the like shit coins and like buying like nihilistic buying, tokens to hope they go up like crazy. I wasn't into that, but I was into the underlying technology thesis. And I know a lot of people in Bitcoin disrespect the entire altcoin world, the Ethereum world, and everything as all shit coinery and all people like without morals and values and aligned interests, but it's actually not true. I mean, there are a lot of those people in that community, don't get me wrong, and those are the ones that are often loudest on Bitcoin X and all the rest. But I wasn't in that space. So when after writing this book, I got invited by a venture capital firm in the UK to like build a blockchain company. And I started building one. And we got to 30 people. We raised some venture money. We thought we were getting product market fit, but we weren't. It was called IMOB, which stood for the Internet of Mobility. It was in the Ethereum kind of world, smart contract world. I did that from 2017 to 2020, end of 2023, early 2024. And along the way, I got jaded and realized that while there are a lot of meaningful like conversations, engineers, builders in that space trying to do the right thing, none of it was gaining real product market fit. None of it's really crossing the chasm. And I couldn't figure out a way to change the direction of the company I had co-founded. And I said, I need a break. And I stepped down as CEO. Think I mentioned, I can't remember, that we got to about 30 people. So we were, decent sized company with an in-house engineering team and, commercial team, etc. But I just couldn't figure out how to make it scale. And I just started losing my perception of the thesis around blockchain technology and crypto. I have had this, after I got my PhD, I've had this back and forth around sometimes being an entrepreneur and sometimes being a professor of entrepreneurship, innovation, sustainability. And I decided to go back to academia for a while to like get my feet grounded again and like do some more research and figure out what I was passionate about and whether that passion would lead me back to the private sector or not. I wasn't sure. And when I moved to Mexico, I took a job as director of at a the number one business school in Latin America. It's called ArcadiaB, leading new programs. I started going back to first principles, testing my original theories, like the ones around this book, that we need to go to another type of economy that's more decentralized. And I finally realized what all Bitcoiners have known for a long time. It's not that capitalism is the problem. It's fiat is the problem. It's central banking. It's debasement. And that is the root of all evil in the world, not companies, which, is better validation for someone who's got a PhD in business and spent most of his life building companies or advising companies or working in that space. So it was actually enlightening and exciting to actually discover that I was wrong this whole time. I love being proven I'm wrong, to be honest with you. I'm not one of those people that like wants to always validate they're right. I love when I have cognitive dissonance and I'm like, wait, all these assumptions I've had my whole life are wrong. Like, whoa, this is fun. I got to dive into this, figure this one out. So that's what I did. I went deeper and deeper and deeper down the rabbit hole, wrote a book called Bitcoin Singularity last year. And in the course of doing all this research and reconnecting with the role of business and society on a sound money standard, I became passionate about working in the Bitcoin space and appreciative of all the companies that are building in this space and building my network. And without knowing what I was going to do next, was I going to build a company myself again? Because I've done that many times, join a company, advise companies that want to adopt Bitcoin. I wasn't sure yet. And I met a guy named Jose Carlos Flores who had started this company called Capital X in Mexico in 2017. Capital X with a K, EX. And as of today, it's now the longest running and largest Bitcoin only company in Mexico. Uh, it had all this like amazing base layer tech and services, but it wasn't really scaling because they were just growing word of mouth and it never tried to scale. And, I don't know if that's because I'm American, but, we always think about go big or go home. And I was like, well, this company has a lot of potential to go way bigger. And I introduced the CEO to the idea of scaling, but also a treasury strategy. And at first he was like, "No, that's not going to work in Mexico." And he's a cypherpunk, so his like gut reaction is, "No, treasury company is bad." The whole story. Paper Bitcoin, all that crap. So, but then he gradually warmed up to it and realized the market was there for it and we could make a big difference. And we kept connecting and we agreed that it would be awesome for me to join. So I joined as chief strategy officer. And I just stepped down from my academic position full-time. I'm part-time now, to focus full-time on ArcadiaB. We rebranded a few months ago. So we're scaling the underlying Bitcoin services business and we're launching the treasury strategy. So it's a hybrid model.
All right, that's a fascinating background, and you've been in the crypto space for a long time. Then 2016, you said you wrote the book where you already talked about DAOs and
Yeah, about
Ethereum.
10 years now.
Yeah, that's before the big ICO craze and run up, so that's really early
Well,
for
what's
that.
interesting is when we started the company, the plan was an ICO. And we had we had our white paper, like we were ready to go, and then the ICO bubble crashed and we withdrew our plans for an ICO. And the ICO market really never recovered. I know in the Bitcoin world, even mentioning ICOs, but it's your fault. You brought it up. It's like, oh, that's like the epitome of shitcoinery at the worst scale. These are scammers. I am telling you, there are a lot of scammers, meme coin crap and all that, but there are a lot of serious professional people, builders, PhDs in computer science that literally believe the world will be tokenized and democratized and decentralized through blockchains. And they are very committed to values not that different than Bitcoiners. So they're not all about just get rich quick and dump and, pump and dump. That's not what the whole industry is about. There are very serious people in the industry. They might be wrong. I'm coming to feel that maybe they are wrong, but they're not wrong intention.
Yeah, that's an important distinction to make. Yeah. You mentioned the book that you wrote last year, the Bitcoin Singularity. Could you get into a bit more detail on what the book is about and what led you to write it?
Yeah, for those who have the video, here's the book over here, Bitcoin Singularity, available on Amazon. Um, so as I was going deeper and deeper down the rabbit hole of Bitcoin over the last couple of years now, so it's really been since 2024, I kept hearing fix the money, fix the world. I read the big print and, Saifedean's, Bitcoin standard and, the the price of tomorrow, Jeff Booth, and Lynn Alden, broken money. And all those do just a fantastic job of explaining what's wrong with fiat and why we need like sound money. But even they often refer to fix the money, fix the world, either directly or indirectly in their thesis in their books. And you hear the fix the money, fix the world everywhere in the Bitcoin community. But what does that exactly mean? And how will Bitcoin fix the world if Bitcoin was ubiquitously adopted? Over what period of time and where in the economy and in our lives will we see it most? And that was close to my heart to think about because my career, I haven't really mentioned it much yet, but my academic and professional and like startup careers all been at the intersection of innovation, technology, and sustainability. Like, how can we move our economy using the tools of capitalism to align it more with societal benefits? So I don't mean like DEI and like doing sustainability for moral reasons. I mean, how do you create a profit incentive that aligns with sustainability objectives, having cleaner air and, better, more renewable energy and, better food and all that. So you can imagine the fix the money, fix the world was like an expression I really liked because I believe in the power of entrepreneurs and capitalists to actually solve real world problems. And when I started realizing that Bitcoin could solve some of the biggest problems in the world, I was like, I got to go deeper on this. And I need to tell the story to a larger audience about how Bitcoin isn't just about fixing the base layer of the economy, but if you do that, what are all the second order effects that it would achieve for society? And so that's what the book is about. And I walk through three epochs that I project sort of into the future, present and future. So the first phase, I call it Bitcoinization, which is where we are now, which is early adopters. Early adopters, whether they're individuals like us, whether they're companies like Strategy and ArcadiaB and Smarter Web and MetaPlanet, whether it's early governments like El Salvador, miners. So the early adopters that are starting to embrace the technology, embracing the money behind it, embracing things. So that's where we are now. We're in the Bitcoinization phase where we're getting kind of awareness and a broader diversity of actors. And I argue that we're basically in that phase from 2009 until 2030. And then I say that the epoch two is hyper Bitcoinization, which is when Bitcoin crosses the chasm and becomes a bit more of a mainstream tool, technology, savings tech, and medium of exchange over time in more and more places. Just becomes, I mean, you can see evidence is starting to happen. Like I just saw Walmart is going to start accepting Bitcoin. Steak and Shake accepts Bitcoin. What Jack Dorsey did with Square and millions of retailers can now accept Bitcoin. It's starting to cross the chasm. It hasn't yet, but it is becoming more of a mainstream accepted thing. I think the original FUD around Bitcoin is starting to die off around it being just for criminals and bad for the environment. A lot of that FUD's kind of fading away, and you're starting to see it more and more accepted in more places. This year in the US, you're going to see way more Bitcoin adoption from banks. I mean, how what better evidence of it crossing the chasm to mainstream can you find than banks in the US, which are conservative financial institutions who fought Bitcoin for a long time and are now embracing it? So we're starting to see that happen, but in specific parts of the world, specific industries. So it's still Bitcoinization, but we're moving towards hyper Bitcoinization in my mind. And for me, hyper Bitcoinization is not necessarily the majority of the world spending and saving in Bitcoin. It's crossing the chasm. So, and this is something that I feel like the crypto community has basically never achieved. NFTs had a window where it started across the chasm and then they died. ICOs kind of, but they died. Metaverse in the crypto world kind of died. I just saw today or yesterday that Zuckerberg is closing down the whole metaverse operation of Facebook, and then they lost some. I might be wrong on the numbers, but I think it's like $70 billion or something. So like there are all these things that like got buzz in the crypto space and then die. The only things that have crossed the chasm are Bitcoin to some extent and stable coins. There is growing sentiment around tokenization of real world assets that might cross the chasm, but I believe that if it does, it will be done eventually at scale on Bitcoin anyway, maybe layer two or whatever. So we're starting to get to that hyper Bitcoinization phase, and I argue that sort of 2030 to 2045. And then the last phase I call Bitcoin Singularity is when it really is ubiquitous around the world. Bitcoin as a store of value and a medium of exchange. Fiat starts to disappear, and all the implications of that, consumerism, war, all the things that go bad in the world because of fiat start to disappear because fiat starts to disappear. So basically those three epochs, I don't just talk about it in like an esoteric way. I talk about it in a very tangible way. Like, where are we going to start to see real world impacts from these things. So I have chapters on treasury companies. I have a chapter on demonetizing real estate. I have a chapter on reducing consumerism. I have a chapter on Bitcoin mining, accelerating renewable energy. So basically, each of those epics will have more and more prevalence of impact in these different sectors. And in the epoch where I think it'll be most pronounced, the impact is where I talk about it as a chapter in the book. So in a nutshell, that's what it's about. It's about how does Bitcoin actually fix the world, over what period of time, and in what areas of life and society and the economy will we most see it win.
And do you think that Bitcoin treasury companies could accelerate this timeline? Because that's something we talk about a lot here in the podcast, is what main value those Bitcoin treasury companies bring to society overall, is that many people get exposed to Bitcoin without having to understand Bitcoin or know about Bitcoin. Even with the preferred shares, for example, they just want to yield and invest in a product that is backed by Bitcoin without necessarily having to understand it, right?
Yeah, I mean that's a very interesting question, and it's controversial one, arguably, in the Bitcoin community, because there are so many people in the Bitcoin community that are very opposed to treasury companies. I find it kind of humorous, to be honest, just because like it's hypocritical. If you love Bitcoin for what its values are, that Bitcoin is for your enemies, you know, I'm sure you guys have, listened to it very attentively, that pod between Saylor and Danny Knowles on what Bitcoin did. That was a controversial interaction, but I get it from Saylor's perspective. I have a lot of respect for Danny, and I listen to his pod a lot, and he's always skeptical of treasury companies, and it kind of annoys me a little bit because it feels like it's kind of rooted in this, like, the same assumption that cypherpunks have, that, oh, it's just like paper Bitcoin and it's bad for Bitcoin. But it's like, it isn't bad for Bitcoin. It's bringing Bitcoin to new audiences. And if we want Bitcoin to succeed and achieve Bitcoin singularity, where the values of the cypherpunks go mainstream and global, then that means everybody embraces Bitcoin. And why are Bitcoiners treating treasury companies as their enemies? If Bitcoin is for your enemies, that means it's for Russia. Or if you think Russia's your enemy, it doesn't mean treasury companies are your enemy. They are they have the same values cypherpunks do. They see that fiat is evil. They want to accelerate a world towards hyper Bitcoinization. They have vehicles that can do it at scale that individuals can't. I think there's clear evidence that without treasury companies, especially strategy, Bitcoin's price would be a lot lower right now, a lot lower, which most cypherpunks wouldn't like, even if they say they don't care about price. They want purchasing power of Bitcoin to go up because, of course, that's what we all want, not just to be wealthier, but just like to be the opposite of fiat, where your purchasing power declines every day. We want to have a store of value that actually works for us. Well, treasury companies are working for all of us. I mean, the alignment of incentives in Bitcoin is unlike anything in my academic or professional career I've ever seen in my whole life, and not even close. Like, I don't know if you guys interviewed Matt Cole yet from Strive?
No,
So
not yet.
I met him at the Treasury's Unconference in New York last year. And he's just so generous with his time. I mean, I'm not getting hours of his time, and I'm not asking for hours of his time, but he agreed to like be an advisor to me, like ad hoc. So like yesterday, I sent him an email about a message on Signal, like very important strategic question for our treasury strategy. And he's one of the people I trust most to give me advice that I should very much listen to. And he gave it to me. Like, I sent him the message in the morning, and like 4 hours later, I got a response from him. And he's a CEO of a public company worth over $1 billion. That's one of the leading players in my space. And he's giving me advice as another company trying to do the same thing he is in another country. And you just don't see that in other industries. And that's just within the treasury community, which is extremely generous within them. But like, miners have similar, incentives individual Bitcoin holders do. Individual Bitcoin holders, while they don't believe it, have similar incentives to treasury companies. Like, what do treasury companies want to do? They want to get rid of fiat and accelerate the adoption of Bitcoin. What do Bitcoiners want to do? Get rid of Bitcoin and fiat and accelerate Bitcoin adoption. We're on the same team. So why do all the Bitcoiners think that we're enemies? Bitcoin is for your enemies, but treasury companies are not your enemies. We are your friend. We have aligned incentives. We're trying to achieve similar things. And we collectively, as treasury companies, can really help Bitcoiners achieve their personal wealth goals and everything else. And as you said, I think it's very important, Quentin, is the whole point around getting exposure to Bitcoin to people who maybe don't even realize it yet. And I'll give you a really tangible example of what makes me passionate about what we're doing at ArcadiaB in Mexico. So like most treasury companies, a part of our ambition is to reach pension funds. Well, in Mexico, there's an official government endorsed pension fund model called Afore, AFORE. There's 7 or 8 of them. They're currently returning around 8-9% a year, but M2 growth is 10 to 12% a year. So they're growing their money supply faster than the rate of increase in the value of the pension funds. So, fiat is eroding gradually the value of pension holders in Mexico. There's 130 million people in Mexico, and 70 million have an Afore pension account. So more than half the country. Well, we can guarantee that 70 million people in Mexico are not Bitcoiners yet. But if we can start introducing fixed income instruments into the pension market here that increase the yields for their pension accounts, gradually the Afores that actually adopt our instruments will have better performance. The holders of those pensions will be like, whoa, why are they outperforming? The holders of the other pensions are going to be like, wait a minute, why is my pension underperforming? And they will discover it's because one of them has exposure to Bitcoin and one doesn't. So some of those 70 million people will gradually become orange pilled. So for me, that's super exciting, the opportunity we have. And the other thing that's super cool about what we're doing, which is very unusual in the treasury space, I'd venture to guess you might not have interviewed anyone else in the treasury space that's doing this. We have the full range of access and exposure to Bitcoin anyone could want, basically. You want to buy Bitcoin in spot and hold it in self-custody? That's how our business started. ArcadiaB started as Capital X to do just that. Last year we did about 50 million in transaction volume in our trading business. So that's a growing area. It grew, I can't remember from 2024, it was before I was around, but I think it was a 3x growth over 2024, if I'm not mistaken. So that's sort of growing organically on its own. And so when we go to, say, a family office, for your listeners not that familiar with the Mexican economy is dominated by family business. Literally 85% of the GDP comes from family business. So family offices are very important in Mexico. So we can go to family office and say, how do you want exposure to Bitcoin? You want to buy it and hold it in self-custody? We got you covered. You want to buy it, but you don't want to custody it yourself? We have our own custody solution. We can do that for you. Or you have acquired Bitcoin and you want to do something else with your Bitcoin. We have a Bitcoin-backed lending program. In fact, we've just started, and this is probably going to be the biggest service we have based on what we're seeing from the market. We've just started offering a new lending program. So in Mexico, there is a higher proportion of assets allocated to real estate than any country I've seen. I can't speak to say it's factual for the whole world. I don't know. I haven't looked at the data by country, but you look at the Jesse Myers famous chart of asset allocation. I recreated that just for Mexico. And I actually just got the updated data on the real estate side. It's over $5 trillion in Mexico is allocated just to real estate. And that represents like roughly 50% of all asset allocation in Mexico. It's crazy high. Like the next biggest is 700 billion. So it's 500 trillion in real estate. The next biggest asset class is 700 billion. So it's huge. So there are a lot of people that have parked their, especially family offices, parked their wealth in real estate as a debasement trade, because real estate tends to go up here around 10% a year. So roughly around the same as the M2 money supply growth of Mexico. So at least they're staying neutral. But a lot of those people are interested in doing more with that asset, but not selling it. It's kind of funny. Like in Bitcoin, we always say never sell your Bitcoin. You know, Saylor has said that historically. Well, he's changed his tune a little bit. So now our theme is you never have to sell your real estate, but you can stack Bitcoin. So what is our model? We have a fiduciary trust now, brand new, that allows us to take the client's title, put it in the trust, initiate a loan, a fiat denominated loan for them to buy Bitcoin for up to, say, 80% of the value of their real estate. We put the title and the Bitcoin in our trust until the customer pays off their fiat denominated loan. So they're able to never sell their real estate, but stack Bitcoin, which is going to presumably go up a lot higher than 10% a year. If you look at Saylor's numbers, 30% a year for 20 years. So you're able to basically more than double your money leveraging your real estate as an asset for acquiring Bitcoin. So that's another way you can get Bitcoin from us. Oh, well, you don't want to do any of those yet. You just want exposure to a fixed income that gets better returns. Well, we can offer you that through our public treasury strategy. So we basically have the whole umbrella, and we're talking to some family offices that are interested in the whole thing. Like, you know what? We want to allocate, 3% of our portfolio spot Bitcoin. You can do that with us. We want to leverage our real estate, get more Bitcoin. You can do that with us. We also have a part of our portfolio diversified in fixed income. We want some of that too. So we're like expanding our Bitcoin exposure across these instruments. So yeah, first of all, we can reach the masses through the pension funds, the 4As with the fixed income, as we talked about. And second of all, we're uniquely positioned in Mexico to offer an unusual diversity of pathways to get exposure to Bitcoin. And I think collectively that can make a really big difference in Mexico. And we'll see. We have some aspirations to expand in other markets in Spanish-speaking Latin America too, and maybe US. We'll see.
Very interesting, and really a Bitcoin company. It's not a Bitcoin Treasury pure play, but it's really a Bitcoin company offering products and services across the spectrum.
That's exactly how
The,
Jack Mullers defines what 21 is. Like exactly
yeah,
the wording you just said is what he says. Like when people say, tell us about 21, the treasury company is like, don't call us a treasury company. It's offensive. We are a Bitcoin company because we are going to be offering financial services around Bitcoin and be stacking Bitcoin in our treasury. I don't find it, I mean, I don't know if he's used the word it's offensive, but he comes across like he doesn't want to be labeled that way.
yeah.
I mean, I get it because he's a cypherpunk too, in a good way. I have a lot of respect for Jack Mullers. Um, but I'm not offended to be grouped in with the treasury companies. I know that because a lot of cypherpunks hate us, then that could be a reason to say, don't label us a treasury company, but that's a big part of who we are. It's just not everything we are.
The big development in the Bitcoin Treasury space over the last year was the preferred equity issuance,
Yeah.
right? And the fixed income products basically that they started offering, starting with Strategy, but now Strive, MetaPlanet coming out with those products. Is that a direction that you plan to go as well with ArcadiaB at some point?
100%. Sooner rather than later, to be honest. Probably not at the scale Strive and Strategy are doing, but one thing that is similar to Strive is that Strive never did the traditional convertible debt instruments like Strategy did. They only have their ATM, their shares, and their preferred SATA. They don't have anything else. And that's kind of the direction we are trying to go, is just have equity and a type of preferred. The current instrument we have drafted is a bit of a hybrid. I probably am not allowed to go into so much detail about it, but it is a fixed income instrument, but has a partial convert option as well. Whether some of our investors in that choose to go for the convert or not is hard to say, because some investors that would go for a fixed income, they have a mandate that doesn't even allow them to hold equity in a company. So we don't know how that will play out, but we have spoken to some investors who want that option. So at the moment, not all of it would be convertible, but some percentage of it would be. So yeah, the TLDR short answer is yes, that's our main focus. And I should add, the Mexican public market has very illiquid equities, but highly liquid, highly in demand debt and fixed income products. So what is liquid are preferreds and debt instruments. What is not is equity. So it actually aligns perfectly that we don't have to overly dilute the shareholders who get access to the shares of our company, either in a private round or public listing. And there's, potentially unlimited demand for a quality fixed income product that's, digital credit based on Bitcoin.
So how would the balance sheet look in this case? Because in order to have those perpetual preferred shares, you need to have a bit of scale, right? And I understand from Ed that the balance sheet currently at ArcadiaB is rather more on the small side.
Of course.
So what's the
Yeah.
plan there?
So we have 16 Bitcoin. We're public about that. We're a private company, but we share that. And pretty soon we plan to have like proper proof of reserves. Which I know is also controversial in the space, but it is aligned with cypherpunk, so they'll like that part anyway. Um, so two answers to that. We're doing a private round, which I can't say much about because that would be solicitation. But we are doing a private round now, and part of the goal there is to get us to around 100 Bitcoin before we issue any instruments, which is still small on the scale of things, but you know, we have mad respect for companies like Smarter Web, Metaplanet as well. But when I was at the Unconference in New York, I was on stage with Andrew Webley from Smarter Web, and I have a lot of respect for Andrew. I love how he communicates in a very transparent way to his investor community. Just a really good guy, humble. Also, like Matt Cole, has been offering me occasional advice when I've asked for it. Um, really good aligned values, like what he's doing, like what he's building. When he started, I asked him, like, because they started small, like they started, their first buy was like 1 Bitcoin. And then they went to, I think he said they went like 1 to 3 to 10. And this was like right around the time of becoming public. Now, of course, I think he did more ATM, more like, classical equity issuance in the beginning than we will be doing. And the normal model that a lot of these treasury companies do is they get retail interest to buy equity to scale the Bitcoin on the treasury to then have enough balance to go after the preferred with institutions, right? That model might not work exactly that way for us because of the market in Mexico. So we have to adapt to that. So part of my answer to your question is we're okay starting small. Andrew Webley started very, very, very small, smaller than us. And he's got, I think, 1,200 Bitcoin now, and, has very ambitious plans for this year. They're going to go public on the London Stock Exchange now. So they're going to move from the, lower tier exchange to the big one, which will give them more global exposure to indexes and all the rest. So they're going to grow even more this year. And he started with 1 or 2 or 3, and he's got 1,200 already in a span of a year. So there were a lot of projects that did massive pipe deals, which is private investment and public equity. And some of those crashed and burned really hard. I don't want to name the names, but your audience will know who they are. Raised hundreds of millions or nearly $1 billion in private investment, and they're struggling like crazy. And we've been watching all that. And our company's been around since 2017. we actually have a low time preference. We're patient. We'll build it what we think is the right way. Yeah, we won't get all the splash if we raised $1 billion right away and we had 1,000 Bitcoin in our treasury. But is the goal to get a splash and like have a near term like very cool valuation and like tell our spouses how cool we are because our company's we're a unicorn already? No, our goal is long term. If you're a true Bitcoin maxi, you're long term. Like you don't really care about short term fluctuation in price or even price of your stock. You're worried about medium and long term. If people want to trade and short and long your stock short term, that's fine, but that's not, I don't believe that's what a true proper mindset of an executive of a public company should be. It's about building long term shareholder value. And is there anything in the world you could do that would build longer short-term shareholder value than stacking Bitcoin? There isn't anything better than that long term. Short term, yeah, but we're not thinking short term. So part of it is that. So it's a two-part answer to your question. Like we're starting small. How do we stack? How do we do the preferred with a small? So part of it is we don't care. We're starting small. We want to start small. Like we're intentionally starting small because we think it's the right strategy. It's more sustainable long term. Also, when you start small, I'm still on the first point, and I'll give you the second one real quick. When you start small, you can show good metrics month over month, quarter over quarter. You start with $1 billion in investment. You have all these pipe investors who are now looking to exit, and you want to like show month over month, quarter over quarter growth in Bitcoin yield and all these things and stock price and all that is really hard. But when you start like Andrew Webley did, it's not hard, and that's what he did, and it worked for him, and that's the strategy we're pursuing. Okay, so that's and part one to the answer. Part two, which I think is super interesting, I already mentioned it, but I didn't explain the flywheel. We've designed our own flywheel that no one else in Bitcoin has, to my knowledge, in the treasury space. I talked about the loan program we have. We have a Bitcoin-backed lending program. A portion of that program, which is going to become the biggest part of our business as far as revenue growth, from what we can tell, it's early, but the demand for the product without marketing it yet from our existing customer base is suggesting we're onto something big. This real estate, use my real estate equity to stack more Bitcoin. 5 trillion in real estate assets invested in Mexico. The TAM, the total addressable market, is big, very big. Okay, so what we generate in revenues from the lending product is designed to service the yield payments of our preferred instruments. So the flywheel we have developed, which is a synergy between our operating business and our treasury business, and this is also like my CEO and partner calls it tropicalizando, like tropicalizing, like making it more Caribbean, like making it relevant to our market in Latin America and Mexico. So in Mexico, investors are conservative. The strategy model, at least before they started stacking dollars as well, would generate so much skepticism here, we wouldn't get traction. The model they had, which was we issue ATMs and we have different types of preferreds and instruments, and some of those have yield, and those yields will be paid primarily from new issuance of capital. That sounds like a Ponzi scheme to Latin America, to Mexicans. And, here there's a lot of fraud and people that don't trust companies or governments or whatever for good reason. And they're more risk averse. So that model wouldn't work here. So, the more we thought about it, we thought we need to really find more synergy between our operating business and the treasury business. So our model is service the debt from the preferreds via our revenues from the lending business. And we have an executive on our team who comes from public markets, who's modeled this out, and roughly it's 1-4. So or 4-1. Basically, for every $4 we have lent out, we can issue $1 worth of preferreds and service those preferreds with the revenues we take from the lending product. So that basically means if we get 400 million out in loans, we can issue 100 million in preferreds that will be serviced entirely from the revenue from the lending product. So we don't have to rely on future capital raises or selling the Bitcoin as a primary vehicle for servicing the debt. And we think that model can scale. And so we have these two parts of the answer. We can go small to begin with. And right now, this year, we're really focusing on building out our lending book so that we can justify the first preferred instruments using the revenue from the lending book.
Yeah, sounds like a healthy way of looking at it. Yeah, because as you mentioned, we saw over the summer a few companies get burned trying to go too fast. And we've also mentioned it quite a few times here in the podcast that grassroots movements seem to be quite or work quite well, especially as you mentioned, looking at especially MetaPlanet and Smarter Web, who have had a great success as well in different jurisdictions. Maybe a question to your lending product. I just want to understand a bit better. So is this a peer-to-peer lending product, or what is it exactly that you do in ArcadiaB with the lending?
So our original lending product, which is still operational and still growing on its own, is people using their Bitcoin to get fiat loans for whatever purpose they want. 2-1. It's like lead-in. You deposit the Bitcoin. We don't do a credit check. We have your Bitcoin, and you get half of the value in fiat with a loan. We have capital partners who provide the underlying lending capital. We think in the future, when we get to scale, we might be able to raise public instruments as a public company just to service our loan book with better terms than we're getting from private capital partners for now. But we get whatever terms we get from our capital providers, and we charge an extra on top, and that's how we monetize that. That's the current version that we've been doing for. Again, I joined in July, so it predates my joining, but I think it's been maybe a year and a half-ish since we've had that loan product in the market. It's grown organically. But the new loan we have, as I mentioned, is people can deposit their title to their real estate into our fiduciary trust. We do a valuation on the property with an independent appraiser. They can get a loan of up to 80% or so of the value of that property. In return, we buy Bitcoin for it. The Bitcoin and the title stay in our trust. And then as they pay off their loan, they get the release of their title and their Bitcoin that we stack for them. And that product is servicing family offices, high net worth individuals. One thing that's worth mentioning, because there are some products similar to this in the US already, but most of the ones I've seen are more focused on you as a primary resident owner. We don't want to touch that sector. I'm sure the companies that have those business models have figured this out and it works great for them, but we don't want to do that one because we don't want to get involved in having to like liquidate somebody's home that they live in. So our mandate for the lending product around real estate is focusing on investors of real estate. And that's, as I mentioned, it dwarfs any other asset class in Mexico as like the preferred place to park your money as a inflation hedge. So people have their money parked there. It's not very liquid, but they can get Bitcoin, which then becomes liquid. They could use the Bitcoin once they've paid off the loan to get other loans for other things, whatever they want to do. So that's the model. It's targeting more wealthy customers, family offices, corporations who have real estate holdings in Mexico.
All right. Yeah, understood. You mentioned now that exactly you're talking mostly to family offices. And I think just in general, not just with family offices, but also when you're talking to retail, I think that we noticed is the education gap when we talk anything surrounding Bitcoin and then Bitcoin treasuries. How are those talks going with the family offices? Is that something that they're quite receptive to, or they're very skeptical about?
Yeah, that's a great question. Before I forget, we're partnering with a group. It's going to be public by the time this is published in your Spotify, probably. So, we are the platinum sponsor, lead sponsor, and partner for an event in Punta Mita, which is this luxury high-end resort area in Mexico. And it's focusing on high net worth and family offices. It's shaping out to be really exciting. That's going to be in May of this year, May 17th and 19th. It's going to be very limited tickets, like 120. And we're pretty sure from the conversations we've had that it's going to sell out. But so we are having those we're organizing events in Mexico that are designed to like educate different audiences. We are co-owners and sponsors of an event that was held this past year in December in Merida, Mexico. And that was called Mayan Bitcoin Conference. It'll be called something different next year and be located at a different location. That's a bit more retail slash like Bitcoin Maxi audience, but there are some Bitcoin curious people that come to that one. So that's like more for a more mainstream audience, whereas the one in Punta Mita is very much targeted on the high net worth and family office market. So I can only speak to my experience since I've started doing this here, but I can also reflect on what my partner Jose Carlos has said. So we've been sitting across the board at boardrooms of family offices, some of which own public companies in Mexico. And I have been blown away by the knowledge and interest around Bitcoin. Now we're not talking probably to the average family office, because to get like a meeting set up with them and sit in their boardroom, they're at least Bitcoin curious, if not more. Otherwise, we wouldn't have a meeting set up. But it's it's heating up a lot. And that's what Jose Carlos has told me. He's like, man, it's crazy. He said, a year ago, even he'd be in these trying to have this kind of meeting, and they would slam the door in his face the minute he mentioned Bitcoin. And now there's we had a meeting like 2 months ago. This was like really interesting meeting. And this, I think, is starting to be like an example of what we're finding in the market right now. So there was like a 30-something executive of a family business, a very successful multi-billion-dollar family business. So don't think of this as a mom and pop pizza joint. This is like a serious family business that has their own publicly traded company. The 30-something guy has been doing his own Bitcoin mining on the side. He's been stacking Bitcoin for 4 or 5 years. And he's been trying to orange pill his dad, who was like the founder of the company. His dad is, close to retirement. His dad starts the meeting saying, I want you all to know I'm skeptical. But my son keeps telling me I need to look at it. And so clearly his son had done some good work, because we spent an hour and a half with him. And when we got done, the dad authorized the son to spend several $1,000,000 buying spot Bitcoin. So, yeah, I think Jose Carlos and I are pretty good in a meeting with these kinds of people. I wrote a book. Jose Carlos has been doing this for 10 years. Like, we know what we're talking about, and we can speak their language and articulate and address their, concerns for sure. But we might be good, but I don't think we're that good. That we started with a guy that was skeptical, is like a billionaire, and in an hour and a half decided to drop 5 million as a starting point, or whatever the number was. I'm making up the number. But my point being, there's a lot more receptivity in Mexico than there used to be. And what we're finding a lot of times is, especially with these family offices, that story of a son or daughter who's like professional age, who's orange pilled or closer to orange pilled, is the one driving the interest in Bitcoin. And then they're trying to move up the chain of their family to get the other decision makers to buy into it. And then that's when they bring us in to try to help close the deal and get the parents on board. So it's really warming up. Exactly why is hard to say. I think there's growing awareness in Mexico and globally around what's happening with Fiat, the sovereign debt crisis around the world, growing concern around nation state risk and all the rest of it. And I think in Mexico, this might sound like trivial, but I don't think it is. I think Ricardo Salinas is also helping our case. So for your listeners who don't know, Ricardo Salinas is top 5 wealthiest Mexicans, multi-billionaire. Uh, he's in a public dispute with the government over several things, but he is a hardcore Bitcoiner who over the past couple years has gradually increased his private portfolio and publicly states he now has 80% of his private portfolio in Bitcoin. He wrote a book about Bitcoin this last year. Um, and why I think that might matter more than you would think is not everyone loves Ricardo Salinas. You know, when you get to be that successful, of course, you have enemies or people who don't like your business, practice, whatever. But most everybody in the business world has mad respect for the guy because he's been crazy successful. And a guy that has that much money and has been that successful, whether you love him or not, you're going to pay attention when he's that articulate and that adamant about the importance of diversifying into Bitcoin. And I believe it's helping our case and like making the market more open to Bitcoin, including the high net worth and family offices.
Yeah, that's amazing. And just being conscious of time, we would have many more questions, but yeah, we're getting close to 1 hour. So, is there anything that we haven't touched on that you think would be especially valuable to the listeners?
I guess I would say because I suspect a lot of your listeners are not in Latin America, and probably a lot of them are from more developed economies. You know, people refer to this sometimes, but like I talked about my experience in Argentina, I've lived in 9 countries now around the world, and this is my 3rd time living in Latin America. So I lived in Argentina, then Chile, and then I lived in Canada and Spain, and I moved to Mexico. Um, I was briefly in Costa Rica, but you know, places like Africa, Latin America, you know, Venezuela, Argentina, Bolivia, a lot of these countries have experienced rapid hyperinflation, corruption, insane, um, seizures, like undemocratic processes. I mean, just last year, for your listeners who don't know, Bolivia decided because they were having their own currency crisis, they decided to basically that what the U.S. government did in 1931 around the gold, basically confiscated people's private gold holdings. Um, Bolivia did to people's U.S. dollar accounts in Bolivia. So they froze all the dollars in U.S. dollar accounts in Bolivia in bank accounts, not because people were doing something illegal, but because they were having a currency crisis and Bolivia wanted the dollars. And they fixed an exchange rate that was inferior to what the real world exchange rate should have been. And they gave you the local currency, whether you want it or not, and took your dollars. So this kind of stuff happens in Latin America on a frequent basis. And so there's so much distrust in the government and in fiat in these markets. And so when you think about the power of Bitcoin and treasury companies in these markets, it could be fantastic. And it's a market that's not well served yet by Bitcoin companies or treasury companies. And, you know, ArcadiaB is trying to solve that starting in Mexico.
Yeah, that's really well put. And coming partly from Latin America, I completely feel the issue. So definitely great. And it makes me really happy to see that there's also development in Latin America in general, in Mexico and other parts in Brazil and so on. So definitely appreciate the work that's being done there. So just before we wrap up, where can people follow you and ArcadiaB?
So it's arcadiab.com is our website. We use ArcadiaB or Arcadia BTC for socials like Facebook and Twitter and X and LinkedIn. And I use at Boyd Cohen, so first, last name on Twitter.
Great. We'll make sure to have all of this in the show notes. So Boyd, this has been a pleasure, and yeah, we could have gone probably another hour, but yeah. So thanks a lot for your time, and yeah, see you next time.
Sounds good. Thank you.
How many chairs are you sitting on right now?